What's going on, everybody, and welcome to the video. In this one, we are going to be talking about a dividend stock that I've recently found that I believe has some pretty high upside potential. I might be adding into my portfolio just after I do a little bit more research on it. But I'm going over everything about this dividend stock, why I'm starting to like it, and how I see things performing. But before we get into that, I'll ask if you do enjoy this type of content, you subscribe to the channel, you turn on post notifications so you don't miss out on any of my future content. But let's go ahead and get straight into it. So as we can see, just for the past day, my portfolio is pretty flat, down 0.14%, $17. If we go ahead, though, and I'll just show you a little bit of activity that went on in my portfolio before we get into it. Yesterday, on the 31st, we'll see, I made a ton of money in dividends. I believe the total was like $26, $27 just in a single day of dividend payments. So definitely a very big thing to see in my portfolio. So just wanted to point that out. This is the power of dividend investing. This is even on like a not even $13,000 portfolio. So keep that in mind. And these dividends are going to be reinvested. And the next time I get paid, I'll be getting paid more in dividends and letting the dividend snowball effect continue to go. But what stock are we going to be talking about today? That stock is going to be Watsco Inc., ticker WSO, $11.2 billion market cap company with a dividend yield right now about 3.39%. Over the past month, the stock is up 15% or 14%. Over the past year, pretty flat, up just 4%. But recently making huge run-ups ever since the end of the 2022 and over the past 5 years, making some pretty solid returns of about 65%. So let's go ahead and look a little bit more into who this company is and some key stats that I like. So first up, they have a P of about 20.7. They have some pretty good margins, a profit margin about 7%. Earnings per share this year have increased by 53.7%, which is very big. One thing I will point out, though, is their trailing 12 months earnings per share compared to next year's earnings per share is a little bit higher in the past. So it is something I'm watching, something to be concerned about. And also the short interest is pretty high at 13.67%. I don't exactly know why the short interest is so high. I haven't seen too much about that, so I will be looking more into that before I do decide to completely buy this stock. But recently, Watsco boosted annual dividend by 11% to $9.80 per share, which is a very big boost in dividend. 11% growth is definitely a very good thing to see. Watsco has paid dividends to shareholders for 49 consecutive years. The company's philosophy is to share increasing amounts of cash flow through higher dividends while maintaining a conservative balance sheet with continued capacity to build its distribution network. Future changes in dividends are considered in light of investment opportunities, cash flow, general economic conditions, and Watsco's overall financial condition. So to get into a little bit more about who this company is, let's just kind of show you. Watsco is the largest distributor of AC, heating, and refrigeration equipment and related parts and supplies, HVACR, in this entire distribution industry. So they are kind of a monopoly. I'll show you some statistics in this investment presentation, which are pretty big in my personal opinion, just showing how big this company really is. But what is their business model? So let's say somebody's AC unit is broken or having some issues. What happens is the contractor will come to this house and they'll diagnose the problem and recommend solutions to the homeowner. And then the contractor visits Watsco and they, maybe they go to their website and they buy the equipment, they buy the parts that is needed to supply to fix somebody's AC. And having messed up AC in your house or apartment, whatever it is definitely something that you don't like to deal with. So it is a big problem to solve. And then contractor completes the repair or replacement of the homeowner's system. So definitely pretty important. They've got some nice locations, 675 total locations, with the majority of them being in the United States. And then market leader, here's that market leader that they have. Here is their estimated revenue in billions. This is from November of 2022 or 2021. I actually completely forgot, so that's on me. But this is their most recent investor presentation. And you can see it's about $6.4 billion, $6.3 billion, compared to the number 2 competitor at about $3 billion. That's like a 100% difference. So definitely big, significant barriers to entry, difficult for consumers to do it yourself with these AC units. And they do seem to have, at least they say, a loyal customer base. Here's kind of the installed base of central AC units and shipments that they've been making with slower CAGRs, 3.5%, 4.5% CAGRs of these. But I'll show you some key statistics in their real growth, which is insane. Okay, so let me go ahead and find these highlights right here. Ownership culture. First up, restricted shares outstanding is increasing and increasing. So these are some pretty solid numbers that you definitely like to see. Watsco's unique equity programs attract and retain the industry's best. And then here's their track record, okay? Revenues 15% CAGR since they launched in 1989. EBIT 19%, share price 15%, dividends 21%, and market cap by 20%. Their 30-year annualized total shareholder return is 21%. That's insane. We kind of look at this slide over here. What we'll see is Watsco TSR ranks 25 out of 1,700 public companies. Only 29 companies have returned over 20% over the last 30 years, and Watsco is one of these companies with that 21% 30-year per year return. So that's definitely pretty big. And then also their balance sheet is very solid right now, just as of most recently, 9/30/2022. So this is from November of 2022. 130 million in cash and cash equivalents compared to $9 million in total borrowings, giving them total shareholder equity of literally $2.3 billion. That's huge. Okay, this company is very financially sound and seems to be very financially healthy. Looking a little bit more, just on this little Chaikin analytics power pulse, we're seeing WSO is bullish just on a number of factors, but I want to show you a little bit more on their dividend. Their 5-year growth rate for dividend is about 13.5%, forward yield of about 3.4%, payout ratio of just below 60%, so it's pretty solid, and dividend growth streak of 9 years in a row. So this is definitely stuff I really do like to see on this company. Furthermore, they do have a return on capital employed and an ROCE as of September of 36.35%, which is very solid and shows this company is making efficient use of their actual money that they have out there. So definitely a really good thing that I do like to see when it comes to this company and just everything that they are doing. Looking a little bit, remember, I don't know if you've seen my most recent video, but I did talk about the kind of research tools and portfolio sheets that I've been making. Here's kind of just look at Watsco on my research tool. So looking at a few key things, one thing I will point out is the analyst 1-year estimate it's not doing the best. You know, that $273 is the 1-year estimate compared to its current price, $291. Something to definitely keep in mind, you know, definitely something. EPS annual past 5-year growth, though, 16% is pretty good for EPS growth, but their next year EPS growth is about negative 5.27%. So keep that in mind. You don't like to see earnings decreasing. That is the number one reason as to why I'm kind of staying away from the stock as of right now. You know, different things like that. But just wanted to show you this key information, all the stuff that comes with these sheets. So if you would be interested, leave a comment below. I always like to hear your guys' information on what you think about these things. But let me show you a little bit more. Kind of like their financial situation, it's pretty healthy. Total revenue is increasing year over year. Total gross profit increasing year over year. Looking at their balance sheet, as we talked about it earlier, it is in a financially great situation. Just as of most recently, you know, total equity is still very, very high. And looking at cash flow, just to show you a few things, free cash flow is the highest in 2020, but it did make its bounce back from the trailing 12 months from compared to 2021. So slowly coming back. Free cash flow, though, is still a very good number that we're looking at, and it does not seem like this company has any financial issues or any financial situations that's about to cause them to not be able to pay a dividend or not increase their dividend. Because remember, they very recently increased their dividend by 11%, and this was in January, so this was not even a month ago. So keep that in mind. But everybody, that is going to wrap it up for this video. So if you did enjoy it, make sure to subscribe to the channel and turn on post notifications so you miss out on any of my future content. Leave a comment below if you'd be interested in these Google Sheets that I'm going to be providing you guys. So thank you again. Check out M1 Finance using the link in the description down below. If you deposit $100, you'll get a free $100 back. And I will see you in the next video.